The question right now is Nvidia orchestrating a Ponzi scheme with Coreweave? Now, this is a really hard opening for a stock and company that I actually love. I'm a big fan of Jensen Huang. I think Nvidia is actually selling for a pretty reasonable valuation right now, about a 1.3 peg, which is pretty low given that they don't manufacture their own chips, they just design them. This is how they get to these 75% gross margins, which are amazing margins, mind you. They bring like 40+% to the bottom line. This is a cash generating machine. It's a fantastic, very rich, well-positioned, moated company with CUDA. But what's fascinating is there's some thought that maybe Nvidia is purposefully propping up Coreweave, which we've made videos about, I'll give you a little recap, to make sure that the value of Nvidia chips doesn't fall. Now, just a few days ago, in my Coreweave video, I showed you the clip where Jensen Huang tells us that the Hopper infrastructure, H100 chips, might be difficult to give away after Blackwell comes out, which is a nice argument that Blackwell's going to be really strong and good. But it's a really bad sign for anybody wanting to invest billions to hundreds of billions of dollars into server infrastructure. This is a potential very large red flag that the market for artificial intelligence is substantially slowing down, at least data center capex. For example, we heard the the chairman of Alibaba, we've already covered this, but to reiterate, the chairperson of Alibaba telling us, hey, we might be seeing a bubble in AI infrastructure. Combine that with the TD Cowen article, where what do we hear? Oh, Microsoft is scaling back some of their investments in data centers. Now, that wasn't exactly how they led their article. TD Cowen's analysis actually led by talking about Meta and Google stepping in place of Microsoft. And Microsoft is still bullish LLMs. They want to create their own LLM software to compete with OpenAI, even though they're investors in OpenAI. But TD Cowen was bullish in that they actually see this idea of a data center pullbacks over at Microsoft as maybe just a shift in priorities for Microsoft. Now, most people didn't talk about that, but the article, while it did reiterate that, yes, Microsoft has walked away from 2 gigawatts of capacity in both the US and Europe in the last 6 months that were in process to be leased, it has also deferred and canceled existing data centers in both the US and in Europe last month. So in other words, this is why we got the news that there were actually more cancellations than we had first heard, because we first heard about this, a couple months ago, and now we're getting this news again. So it's not just what's been happening in the last 6 months, it's also what's happening in the last month. And it's sort of getting worse. Now, their view is that the pullback in new capacity leasing by Microsoft was largely driven by the decision not to support incremental OpenAI training workloads. However, now I'm going to throw in a note here. At the same time, if Microsoft doesn't want to support incremental OpenAI workloads because they modified their multi-year contract with OpenAI and said, hey, go ahead and use other companies like, let's say, a Coreweave, and which we'll talk about that at Nvidia again in just a moment. This is very important to it, although somewhat tangential. OpenAI can now use other companies other than Microsoft. This thesis would make sense from TD Cowen, but Microsoft has now announced that they want their own LLMs rather than just rely on OpenAI, which is interesting because why are they canceling leases on data centers, old and new, and walking away from deals if they're also wanting to build out their own LLMs? Well, it's likely because, hey, they want the delicious data that comes from having your own LLM, but they don't necessarily need additional capacity because capacity is becoming cheap. And that's the problem of the potential, quote unquote, Nvidia Ponzi. I know it's a hard line. I'll explain why I'm saying that in just a moment. So to me, I don't think we can say AI demand up and people use GPT or Grok or whatever, therefore AI stock up. I think the days of that are over. I think we can all agree that we like using the GPTs or the Groks or whatever for encyclopedic purposes, for brainstorming, for ideation, for legal review, contract review, or just doing stuff we don't want to do. This is fantastic. But does it necessarily mean we need even more data centers than we've already built out? And the answer here seems to be mostly and resoundingly No, that we may have already hit some form of capacity. That said, TD Cohen actually thinks this is an opportunity for Google to step in, or Meta to fill in and backfill sort of some of that canceled capacity. But again, the point of that is, hey, wait a second. If the other companies are filling in, then you're still building. Just like the chairperson of Alibaba says, hey, it's still getting built out even though we don't need it. Somebody's picking it up. Somebody's spending the money on it. It's probably not the greatest ROI. So my argument is, while Google and Meta might pick up some of these leases, I think Microsoft is sending you a signal that the money isn't in the data centers. The money is in collecting data from people. By the way, who knows, maybe Microsoft will buy 23andMe and get all your genetic data. Which, by the way, in 2021, I got interviewed by NASDAQ about 23andMe. And I told them it was an overvalued stock and you shouldn't buy it. You can actually look that story up if you Google I'll just do it right now. NASDAQ, meet Kevin Paffrath, SPAC 23andMe. I'm like, no, this thing doesn't make money. There it is. First line, it is right there. VG Acquisition Corp SPAC deal with 23andMe is 2. And then it goes into like speculative is I think what the full title is. You can go check it out yourself. But they did that interview with me, analyzing the SPAC deal with Meet Kevin. But anyway, what's really interesting is we have plenty of signals at the moment that the data center build out is probably overhyped. But now we have something else interesting that's happening. We have Nvidia saying they are going to buy up to $250 million of Coreweave stock at IPO. Now, this is really interesting because what that does is it creates a floor. Just this morning, we heard that Coreweave is actually downsizing their IPO from about $2.7 billion of expected proceeds down to $1.5 billion. And in addition to that, the price is going to be lower than expected. Nvidia now, by the way, coming in to backstop this at an anchor of $40 per share. Now, I find this interesting because Nvidia makes a lot of money selling to companies like Coreweave. And this isn't solely about Coreweave. It's about the entire industry. Think about this, okay? Let's just take this to the extreme for a moment. I always think when you do an analysis, you should assume the middle, but study the extreme, right? So in an example, you lose your job and we go into a recession and you can't make your payments. What is the extreme solution you're gonna have? When you analyze that before things go poopy, you know how to prepare yourself, right? Okay, that doesn't mean that's gonna happen. So if Coreweave IPOs at $40 and Nvidia doesn't back them, and Coreweave drops to, I don't know, 0, okay? Let's just go extreme. Go to 0. Coreweave goes to 0. Well, what happens? Well, now all of a sudden the value of every data center in the country plummets, gets written down because of a failed Coreweave IPO. The industry cannot allow Coreweave to fail, which in a weird way is actually bullish for Coreweave's IPO because you've got all these institutions that have so much risk of Nvidia stock going down. Think about any VC who's investing in these private data centers, or even honestly XAI in their Tennessee data center. If Coreweave went to 0, the Tennessee data center that XAI owns would be worth substantially less. New data center projects would come into question. And then guess what happens? If somebody's like, hey, Nvidia, I want to buy 100,000 Blackwell chips to, invest in a data center. Oh crap, but wait, the last company that did that with Hopper chips, you guys bankrupted them by coming out with too good of chips too rapidly. Well, why the hell would I buy Nvidia chips and go into making a data center? You're basically buying at peak bubble for data centers. So it is industry critical that the Coreweave IPO goes well. Even if you don't care about the Coreweave IPO, if Coreweave plummets, it's bad news for Nvidia, AMD, and any of the relateds. Super microcomputer for the infrastructure, Vertiv for water cooling. I don't really care what it is. Dell for the 4% of their business that's exposed to AI data center servers anyway. It's bad. So this is where the Ponzi thesis comes from. Let's take other money and funnel it into Coreweave to prop Coreweave up to make it seem successful, and then, pay out shareholders if the share price goes down to make sure the whole system still seems sound. Meanwhile, it's propped up by Fugazi just to prevent the entire thing from falling more substantially. Now, I'm not here saying Coreweave's going to go to zero, okay? I'm just saying, even Coreweave going down 20%, and let's say it IPOs. So usually what they do is they'll IPO at 40 bucks, but they'll probably be up at like $60 when it first trades because they purposefully restrict the shares. And we know Nvidia is putting a $250 million floor in at 40. So people speculate this up to $60 or $80 or whatever. This is why you almost always see an IPO. It's like, it's up 50% on the first day of trading. That's all part of the marketing because the businesses want the article. That's like, look at how successful our IPO was. Even though they'll raise less money because they're not going to benefit from that run. It's the people buying it who will benefit from that run. Coreweave will raise less money. It'll still be good enough. Because remember, they've got about that's like $2.8 to $3 billion of bills coming due this year. They don't have the money. $1.5 billion is going to help them. And then they can always issue more shares in 6 months. Although in 6 months, that's when your insiders are going to have a lockup expiration. So you probably are going to be like more like 3 months before they start to raise money. And the issue with that is how much is that stock potentially going to fall? And what kind of downstream effects is that going to have to other stocks? So I'm not saying, because I think there's going to be a lot of support for trying to keep Coreweave propped up because it's so industry critical. So I'm not saying the stock is definitely going to go down. I'm not saying you should, short at day one because you could get totally hosed by, what I think is at play here. But my point is, what I would encourage is watch the financials of Coreweave and the price action, because the price action of Coreweave and the financials of Coreweave will give you a really good barometer as to the future of investing in chip plays like Nvidia. So if I'm, let's say, a future Nvidia buyer, what am I looking for? Well, I'm looking at, hey, if Coreweave plummets, maybe I'm less interested in Nvidia at today's price and I'll wait for it to be $80 or $60 or whatever. If Coreweave takes off, it stays up, they do their secondary offering, it keeps cranking 6 months from now, they have their insider transactions that unlock, and after those unlock, they're still doing well, and they're able to raise money and invest more into data centers. Great, that's supportive of Nvidia's stock. So think about this as sort of a canary, if you will. The canary has arrived to the proverbial coal mine.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.